Look, I need to show you something that's happening right now to your retirement savings, and most people have no idea it's even occurring. While you've been watching your 401k statements and feeling pretty good about those numbers going up, there's been a silent transfer of wealth happening that's making those gains almost meaningless. And silver is sitting right at the center of this story. Let me paint you a picture of what's really going on. You know how you look at your retirement account and see it's worth, say, $500,000, and you think, okay, I'm on track. Here's the problem. That number is measured in dollars. And while that number has been climbing, the purchasing power of each one of those dollars has been getting absolutely demolished. It's like watching your bucket fill up with water while someone's drilling holes in the bottom. Sure, the water level might be rising, but you're losing more than you're gaining. The official inflation numbers tell you it's around 3 or 4%. But let's be honest about what's actually happening when you go to the grocery store, when you pay your insurance premiums, when you look at housing costs, when you try to buy a car. The real inflation you're experiencing is running somewhere between 8 and 12% annually. That's not conspiracy theory. That's just math when you look at what things actually cost versus what they cost a few years ago. Now here's where silver enters this equation, and why it's become absolutely critical for anyone thinking about retirement. Silver has historically been the people's hedge against currency devaluation. Gold gets all the headlines, sure, but silver has always been the accessible precious metal that regular folks could accumulate to protect their purchasing power. And right now, silver is telling us a story that should have every retiree and pre-retiree paying very close attention. Let me take you back to a moment in history that rhymes with what we're seeing today. In the late 1970s, inflation was running rampant. People who had saved their whole lives were watching their retirement dreams evaporate. The dollar was losing value so fast that anything priced in dollars was becoming a trap. And what happened to silver during that period? It went from around $4 an ounce to over $50 an ounce in just a couple of years. That wasn't speculation. That was people desperately trying to preserve their wealth as the currency system came under extreme stress. We're seeing echoes of that same dynamic right now, but with some crucial differences that actually make the situation more urgent. Back then, the total debt in the system was measured in billions. Today, we're talking about trillions upon trillions. Back then, the Federal Reserve's balance sheet was relatively modest. Today, it's been expanded to levels that would have been considered impossible just a generation ago. Back then, we weren't dealing with the kind of geopolitical fragmentation we're seeing now, with countries actively working to move away from dollar dominance. Let me show you what's happening in the silver market specifically, because this is where it gets really interesting. Industrial demand for silver has been absolutely exploding. Solar panels require significant amounts of silver. Electric vehicles use substantially more silver than traditional cars. 5G infrastructure, medical applications, water purification systems, the list goes on. We're talking about industrial demand that's consuming more silver than is being mined out of the ground every single year. At the same time, investment demand has been surging. People are waking up to what's happening with currency devaluation. They're looking at their retirement accounts and realizing that nominal gains don't mean anything. If the currency those gains are denominated in is losing purchasing power faster than the account is growing. And they're turning to physical silver as a way to preserve wealth outside the traditional financial system. Here's the kicker, though. The silver market is tiny compared to other asset markets. The entire above-ground supply of investment-grade silver is worth maybe around $50 billion. That's less than the market cap of many individual companies. It's a rounding error in the bond market. It's nothing in the context of global wealth, which means when money starts flowing into silver, even relatively modest amounts of capital can move the price dramatically. Now let me tell you about something that's been happening behind the scenes that most people aren't aware of. Central banks around the world have been accumulating gold at record pace. We're talking about hundreds of tons being purchased quarter after quarter. China, Russia, India, Turkey, Poland, the list keeps growing. These aren't small purchases. These are strategic accumulations by sovereign nations who are looking at the global monetary system and making a calculated decision to hold more hard assets and fewer dollars. But here's what's interesting about silver in this context. While central banks are buying gold, industrial users and private investors are competing for available silver. And unlike gold, where most of what's ever been mined still exists in some form, silver gets consumed. It gets used up in industrial applications where it's not economically recoverable, which means the above-ground supply is actually shrinking even as demand is increasing. Think about what that means for the price trajectory. You've got declining supply, surging industrial demand, increasing investment demand, and a tiny market that can't absorb large capital flows without significant price movement. It's a setup that doesn't come along very often in financial markets. Now, I want to take a quick aside here because this is relevant if you're sitting on a substantial retirement account. If you've got $100,000 or more in traditional retirement accounts like a 401k or IRA, there's something you should know about. I've put together a comprehensive guide on how gold IRAs work, and it's available in the description below. It covers how you can get physical precious metals into your retirement account without triggering tax penalties or early withdrawal issues. It explains the rollover process, the custodian requirements, the storage rules, all of it. If you're concerned about currency devaluation eating away at your retirement purchasing power, it's worth taking a look at. The guide is completely free, no strings attached. All right, back to what's happening with silver and why this matters so much for your retirement timeline. Let's talk about the relationship between silver and the dollar, because this is fundamental to understanding what's at stake. When the dollar is strong and stable, when people have confidence in the currency, precious metals tend to trade in a relatively narrow range. But when that confidence starts to crack, when people begin to question whether the dollar will maintain its purchasing power, that's when you see precious metals start to move. And we're seeing cracks right now that are impossible to ignore. The federal government is running deficits that would have been considered catastrophic just a generation ago, and they've become normalized. We're adding trillions to the national debt every few years. The interest payments on that debt are now consuming a massive portion of the federal budget. And the only way to service that debt without defaulting is to keep the currency printing presses running, which means continued devaluation. For retirees and people approaching retirement, this creates a devastating dynamic. You've spent decades accumulating dollars in your retirement accounts. You've been responsible, you've saved, you've done everything right according to conventional financial wisdom. But if those dollars are losing purchasing power at 8 or 10 or 12% per year, you're on a treadmill that's speeding up. You need your account to grow faster than the real rate of inflation just to stay even, and most retirement accounts aren't generating those kinds of returns, especially not on a risk-adjusted basis. This is where silver becomes not just an investment, but a form of insurance. When you hold physical silver, you're holding an asset that has maintained purchasing power across centuries. You're holding something that can't be printed, that can't be devalued by central bank policy, that has intrinsic value based on its industrial utility and its monetary history. You're stepping outside the system that's quietly confiscating your wealth through currency debasement. Let me give you a concrete example of what I'm talking about. Let's say you retired in the year 2000 with $1 million in your retirement account. That felt like a substantial nest egg at the time. You could buy a nice house for $200,000. A new car cost $20,000. Healthcare was expensive but manageable. Your $1 million had real purchasing power. Fast forward to today. That same house is now $600,000 or more in many markets. That car is $45,000. Healthcare costs have exploded. Your $1 million, even if it grew with the stock market, has lost massive purchasing power. The number might be bigger, but what it can actually buy has shrunk dramatically. And if you had converted even a portion of that million into physical silver back in 2000, when silver was trading around $5 an ounce, you'd be sitting on gains that would have more than kept pace with real inflation. Now here's what's happening right now that makes this so urgent. We're at a point where the silver price is being held down by paper market dynamics while physical demand is surging. What do I mean by that? The silver price you see quoted is largely determined by trading in the futures market, where contracts representing silver are bought and sold, but very little physical metal actually changes hands. It's a paper market that can be manipulated by large players who have an interest in keeping precious metals prices suppressed. But in the physical market, where actual silver bars and coins are bought and sold, we're seeing premiums explode. We're seeing delivery delays. We're seeing mints struggling to keep up with demand. There's a disconnect between the paper price and the physical reality. And historically, when that disconnect gets large enough, the paper price eventually has to adjust to reflect physical market conditions. And when that adjustment happens, it tends to happen fast. Think about what that means if you're trying to protect your retirement purchasing power. Right now, you can still buy physical silver at prices that don't fully reflect the supply-demand fundamentals. You can still accumulate an asset that's being consumed industrially, that's being sought after by investors globally, that has thousands of years of monetary history, at prices that are historically reasonable relative to gold, relative to the money supply, relative to financial assets. But that window is closing. As more people wake up to the currency devaluation that's happening, as more investors realize that their retirement accounts are losing purchasing power in real terms, as more industrial users compete for available supply, the price is going to adjust. And when it does, the people who accumulated physical silver beforehand are going to be the ones who preserved their wealth. Let me tell you about another historical parallel that's relevant here. In 2008, during the financial crisis, there was a brief moment where silver prices dropped as everything sold off in a panic. But then, as central banks around the world responded with unprecedented monetary stimulus, as they printed trillions of dollars to bail out the financial system, silver went on a massive run. It went from around $9 an ounce to nearly $50 an ounce in less than 3 years. The people who understood what all that money printing meant for currency values, who positioned themselves in hard assets during the crisis, they didn't just preserve their wealth, they multiplied it. We're in a similar setup right now, except the amount of money that's been printed, the size of the debt that's been accumulated, the degree of currency devaluation that's already occurred, it's all much larger than it was back then. Which suggests that when silver makes its next major move, it could be even more dramatic than what we saw after 2008. Now, I want to address something that I know some people are thinking. They're looking at their retirement account, seeing it's up over the past few years, and thinking, why do I need to worry about this? And that's exactly the trap. Those nominal gains feel good. They look good on your statement. But they're not keeping up with real inflation. They're not preserving your purchasing power. They're giving you the illusion of wealth accumulation, while the actual value of your savings is being quietly eroded. Here's a simple test. Look at what your retirement account could buy 10 years ago versus what it can buy today. How many years of living expenses did it represent then versus now? How much house could it purchase then versus now? How much healthcare could it cover then versus now? When you do that math, when you look at real purchasing power instead of nominal dollar amounts, the picture becomes much less rosy. And this is why silver matters so much for retirement planning. It's not about getting rich quick. It's not about speculation. It's about preserving the purchasing power you've spent decades accumulating. It's about making sure that when you need to draw on your retirement savings, those savings can still buy the things you need. It's about protecting yourself from the silent confiscation that happens through currency devaluation. The industrial demand story for silver is only getting stronger. The push toward renewable energy, the electrification of transportation, the expansion of 5G and eventually 6G networks, the growing use of silver in medical applications, all of these trends require massive amounts of silver. And unlike some industrial metals where substitutes exist, silver's unique properties make it irreplaceable in many applications. Its electrical conductivity, its thermal conductivity, its reflectivity, its antimicrobial properties, these aren't things you can easily replicate with other materials. What that means is we're looking at structural industrial demand that's going to persist and grow for years, probably decades. This isn't a cyclical demand story that will fade when the economy slows. This is a fundamental shift in how we generate energy, how we build infrastructure, how we manufacture products, and all of it requires silver. At the same time, silver mining isn't keeping up. Most silver is actually produced as a byproduct of mining other metals like copper, lead, and zinc, which means silver supply is largely dependent on the economics of mining those other metals, not on the silver price itself. Even if silver prices rise substantially, it doesn't necessarily lead to a big increase in supply, because the mining decisions are being driven by other factors. This supply-demand imbalance is setting up a situation where the silver price has to rise substantially just to bring the market back into balance. And for people holding physical silver, that price rise translates directly into preserved and enhanced purchasing power. Now let's talk about the geopolitical dimension of this, because it's becoming increasingly important. We're watching the global monetary system fragment in real time. Countries that have traditionally held their reserves in dollars are diversifying. Trade agreements are being struck that bypass the dollar. Central banks are accumulating gold at the fastest pace in decades. There's a clear move away from dollar dominance. And while that's happening gradually, the trend is unmistakable. What does this mean for your retirement savings if they're denominated entirely in dollars? It means you're holding all your eggs in one basket, and that basket is being actively undermined by global monetary trends. It means you're exposed to the risk that the dollar's role as the global reserve currency could diminish, which would have profound implications for its purchasing power. Silver, like gold, is a global asset. It's valued everywhere. It's not dependent on any single government's policies or any single currency's stability. When you hold physical silver, you're holding something that will maintain value regardless of what happens to the dollar, regardless of what happens to the global monetary system. You're diversifying away from pure currency risk. And here's something that doesn't get talked about enough. In a world where financial assets are increasingly digital, where your retirement account exists as entries in a database, where your wealth can be frozen or restricted or taxed with the stroke of a pen, physical silver represents something different. It's tangible. It's in your possession. It's outside the financial system. That's not paranoia. That's just recognizing that having some of your wealth in physical form, outside the banking system, provides a layer of security that digital assets simply can't match. For retirees, this matters enormously. You're at a stage of life where you can't afford to take big risks with your savings. You need stability. You need purchasing power preservation. You need assets that will be there when you need them, that won't be subject to counterparty risk or system failures or policy changes that could restrict access to your wealth. The silver market is also showing us something interesting in terms of investor behavior. We're seeing a generational shift in how people think about wealth preservation. Younger investors who've watched currency devaluation their entire lives, who've seen multiple financial crises, who've witnessed unprecedented monetary intervention, they're turning to hard assets in ways that previous generations didn't. They're buying physical silver and gold not as speculation, but as core holdings. They understand intuitively that the monetary system is unstable and that holding some wealth outside that system is prudent. This generational shift in demand is just beginning. As more wealth transfers to younger generations, as more people recognize the risks inherent in a purely fiat currency system, demand for physical precious metals is likely to increase substantially. And again, because the silver market is so small, even modest increases in investment demand can have outsized effects on price. Let me bring this back to your specific situation. If you're approaching retirement or already retired, you're facing a unique set of challenges. You can't just ride out market volatility and wait for things to recover. You need your savings to be there when you need them. You need them to maintain their purchasing power. You need to be able to convert them into the goods and services you require to live. The traditional retirement planning advice of holding a mix of stocks and bonds doesn't adequately address the currency devaluation risk we're facing. Bonds are getting destroyed by real inflation. Stocks are volatile and increasingly disconnected from underlying economic fundamentals. Real estate is expensive and illiquid. What's missing from most retirement portfolios is an allocation to hard assets that can preserve purchasing power when currency values are declining. Silver fills that role. It's accessible in a way that gold isn't for many people. You can accumulate it gradually. You can hold it physically. You can sell portions of it when needed without having to liquidate large positions. It's liquid, it's globally recognized. It's been a store of value for thousands of years. The price action we're seeing in silver right now is telling us that something is building. The physical market is tight. Industrial demand is strong. Investment demand is growing. The paper market is showing signs of stress. Central banks are accumulating gold, which historically has led to silver following with even more dramatic percentage moves. All the pieces are in place for a significant repricing of silver relative to fiat currencies. And when that repricing happens, the people who positioned themselves beforehand, who understood what was coming and took action to protect their purchasing power, they're going to be the ones who maintain their standard of living in retirement. They're going to be the ones who can afford health care, who can afford housing, who can afford the lifestyle they worked their whole lives to achieve. The people who didn't take action, who kept all their wealth in dollar-denominated assets, who trusted that the system would protect their purchasing power, they're going to find that their retirement dreams have been quietly devalued. They're going to discover that the numbers on their statements don't translate into the purchasing power they expected. They're going to face difficult choices about cutting expenses, reducing their standard of living, maybe even going back to work. This isn't about fear-mongering. This is about recognizing the reality of what's happening to currency values and taking prudent steps to protect yourself. Every retiree should have some allocation to physical precious metals as insurance against currency devaluation. The exact percentage depends on your individual situation, but having zero exposure to hard assets in an environment of aggressive currency debasement is a risk that's not being adequately appreciated. Silver specifically offers advantages for retirement planning that make it particularly attractive. It's more affordable than gold, which means you can accumulate meaningful positions without requiring huge amounts of capital. It has industrial demand supporting its value, which provides a floor under the price. It has monetary history going back thousands of years, which means it's globally recognized and accepted. And it's showing supply-demand fundamentals that suggest significant upside potential from current levels. The window to position yourself is still open, but it's narrowing. As more people recognize what's happening, as physical demand continues to exceed supply, as the disconnect between paper and physical markets becomes more apparent, the price is going to adjust. And when it does, the opportunity to accumulate silver at current levels will be gone. Your retirement dreams don't have to be devalued. You can take action to protect your purchasing power. You can allocate a portion of your savings to assets that maintain value when currencies decline. You can ensure that the wealth you've spent decades accumulating will be there when you need it, with the purchasing power intact. The choice is yours. You can continue holding all your wealth in dollar-denominated assets and hope that currency devaluation slows down, that inflation moderates, that the monetary system stabilizes. Or you can recognize the trends that are in motion, understand what they mean for your purchasing power, and take steps to protect yourself with hard assets like physical silver. The evidence is clear, the trends are unmistakable, the risks are real, and the solution is available. Physical silver represents a way to preserve purchasing power, to diversify away from pure currency risk, to hold wealth outside the financial system in a tangible form that has maintained value across centuries. Don't let your retirement dreams be quietly devalued by currency debasement. Don't assume that the numbers on your retirement statement represent real purchasing power. Don't wait until everyone else figures this out and the price has already adjusted. Take action now while you still can, while physical silver is still available at prices that don't fully reflect the supply-demand fundamentals, while you still have time to position yourself before the next major move in precious metals. Your future self will thank you for having the foresight to protect your purchasing power when it mattered most.